Today is January 22nd, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grain markets this morning. Fundamentalists are bearish soybeans because of the large U.S. and global supplies and carry-out figures. Are prices artificially high, and if so, why?
You know, it was interesting. At our annual meeting, it was like the number one question that brokers were asking: why are soybean prices so high? And I think number one is that, you know, the market knows that, and it's still trading other things. And I think the number one thing that we're trading is, if we have a deal, the Chinese will come in and they'll buy soybeans, they'll buy corn, they're talking about wheat, they'll buy pork. All those markets are all tied together, and those markets will rally. So I think artificially we're up because of that. Number two, we don't have any hedge pressure at all. The farmers not selling, South American farmers not selling, so there's no hedge pressure over the market. And then I think that even though the U.S. has been in a shutdown, we don't have any data. I think that maybe non-China buyers have been buying as much as 150 million bushels of U.S. beans during the shutdown. We don't even know about it. So I think the market is okay for now, priced okay, and we need some data, and we need to find out about the deal in order to move the market away from these prices.
So you mentioned the shutdown. How is the U.S. government shutdown affecting the markets?
The market feeds on data, and so we don't have the export sales data. We don't know what the commitment to traders report is doing. We didn't have the January 11th reports. The market just sitting here starving for data. And I think that once the data comes out, we'll have a violent, volatile reaction to it, and then after that, we'll start trading 2019 information.
Another thing we don't know about is when the China-U.S. trade issue is going to be resolved. What's the latest on that?
Well, I think Alan will probably talk about this also, but on Friday Chinese were talking about a buying spree to eliminate the deficit of $323 billion. And then over the weekend, White House advisors said there's a long way to go. And then this morning, there was a report that they're thinking about buying 7 million tons of U.S. wheat. So I think there is a shopping list that they will come in and buy once there's the deal. But there was a Bloomberg article out that said that they still have to resolve the intellectual properties things. And that issue right now has not been resolved.
Let's talk a little bit about South American crop right now. What's the latest on the South American weather and crop outlook?
25% of Brazil is still too dry, 25% of Argentina is still too wet. We saw one private group bring their estimate of the Brazilian soybean crop today down to 115 million tons. The USDA's last number a month ago was 122. We feel that we need to get below 111 for it to be bullish prices.
Finally, Steve, what's the estimated net fund position in grains right now?
Well, we don't have a commitment to traders report, but we think they're long 126,000 contracts of corn. They're short a little bit of meal, they're short a little bit of beans, and they're short a little bit of wheat, and they're short a big chunk of oil. So they're short about 68,000 contracts of the others. So that gives them a net position of about 40,000 contracts in which they're long. Last year they were short 400,000 contracts going into 2018.
I assume they're waiting for information as well, just like everybody else.
Yeah, they're on hold. I mean, they really don't know what to put a position on until they know what the trade war is.
Alan, is there an increased optimism that the U.S. and China will reach a trade agreement?
I think there is a better tone and a better feeling about an agreement coming sooner rather than later. And some of the reasons that I think this is the case are in the markets themselves. For example, the Shanghai stock market has actually stopped losing ground to the U.S. equity markets, and it has bounced off of the lows. Of course, so has the U.S. markets. Also, the Chinese yuan, which was closing in on 7-1, now seems to be holding up relatively well, which also should not take place at a time where there's so much accommodation coming from Chinese monetary authorities. So there are a variety of signals in the market suggesting that there will be an agreement sooner rather than later.
And I know you follow the industrial commodities, including crude, copper, and lumber. What's your outlook there, and how does that relate to the U.S.-China trade situation?
all of those markets are looking very good on the charts. They have bottomed, breaking a lot of downtrend lines on the upside. So I think the industrial commodities are telling us that an agreement is likely to be reached, and I think it's a very good indicator that something will progress as far as the trade deal is concerned.
Interest rates for a minute, Alan. Do you have a trade recommendation on the 30-year Treasury bond futures?
I do. I had been bullish for a while, turning neutral more recently in the last week or so. I think that once there is a trade agreement announced, there will be a downdraft in the futures market, especially the long end, and I think that is the break to buy. Maybe give it a day or so for the rest of the world to react to an announcement, assuming there is one, and I think there will be one. So that break will probably be somewhat severe, but that would be the timing to come in back on the long side. The global economy is still weak. Central banks are not going to be raising interest rates anytime soon, so there's a lot of accommodation coming and remaining from central banks. So buy that break.
So to be clear, wait for the situation with the U.S. and China to be resolved.
Exactly.
Then look for the break. There's your opportunity.
That's exactly what I would do. Wait for that agreement, buy that break when it happens.
Great. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.